Բանկի խորհուրդը որոշեց իջեցնել վերաֆինանսավորման տոկոսադրույքը սահմանելով այն 7.25%,
setting it at 7.25. On its session of October 29, we reduced. We think that the lower rate is necessary to continue to meet its price stability objective of ensuring an inflation rate of 4% over the medium price term. Annual CPI inflation has continued to remain below the target, registering 0.6% in September. Core inflation has also remained at low levels at the same month of September, 0.7%. In Q4 2024, risks of slowing economic growth globally and in the key trading partner countries of Armenia continue to persist. Global inflation continues to slow, however, sticky prices in key trading partner economies continue to remain relatively elevated. Persistent geopolitical uncertainties in the Middle East as well as growing tensions in international trade relations continue to create risks for future growth in global commodity prices and potential disruptions in global supply chains. At the same time, labor market conditions in key trading partner countries, particularly in the United States, are gradually easing in tandem with a measured adjustment on demand conditions. Conversely, uncertainty about the scale of impacts of fiscal policy on aggregate demand conditions in the US has risen. In this context, advanced economy central banks would be expected to continue to gradually ease policy rates in the near term, while still maintaining a relatively tight stance. Consequently, the external environment would be expected to transmit weak inflationary pressures on the Armenian economy while embodying some upside risks. Economic activity in Armenia in Q3 somewhat softened in Q3 but continues to remain above its stable long-term levels. Growth in economic activity has largely been driven by meaningful growth in construction, services and trade. These dynamics continue to be impacted by certain short-term factors, posing significant uncertainty with respect to the sustainability of economic growth and its long-term outlook, as well as the future trajectory of domestic demand and consumption conditions. Despite strong economic activity in the current period, external demand for domestic services continues to slow. Labor market conditions continue to somewhat cool amid these conditions, as reflected in stabilizing wage growth, non-traded sticky price inflation, and inflationary expectations. At the same time, risks for additional demand pressure stemming from fiscal policy still persist. In order to manage possible risks stemming from conditions of high uncertainty, the board considers multiple scenarios during its deliberations. On the one hand, discuss scenarios where possible underlying developments would require a higher path for the policy rate relative to current market expectations. And these uncertainties require a more stringent response to manage those risks. On the other hand, the board discussed B-type scenarios where potential economic developments, including risks of low inflation expectations and the weak demand environment emerging, would cause inflation to remain at a persistently low level longer. This would imply a more rapid and aggressive downward path to the policy rate than it is currently priced in markets in order to sustainably stabilize inflation at the target in the medium-term horizon. While the board believes that while there is a greater likelihood of case B-type scenarios materializing, the board emphasizes the importance of minimizing the losses that could stem from case A-type risks. The board thus finds it appropriate to continue to gradually ease the policy rate. The board resolutely affirms its commitment to adopting the appropriate policy actions and strategy to ensure the price stability objective of 4% inflation in the medium term. Questions? About the Fed rate decrease, and the likely subsequent possible decreases and their policy implications. What could they be upon us? Thank you for the question. You may recall that we talked several times back when the rate was not reduced yet. For us, one of the factors that we contemplated was also the policy of the US Fed. The Federal Reserve the previous time reduced it by 50 percentage points. According to predictions of market players, at the next meeting it will reduce it by another 25 base points. The likelihood is high, and we believe that to keep the interest rate from the global risk-free rate, they create a possibility for other countries to enjoy certain space for implementing their policies, which for us may be conducive in the sense that, and we mentioned that in the press release, there is a higher likelihood of B-type scenarios materializing, which assumes that the economy may slow down over the previous years. So to incentivize the economy, we'll have more space for policy rate adjustments. On the other hand, the Russian central bank continues to increase its policy rate, and the estimates are that in the midterm horizon, in the coming months, the inflation will be high because it's also determined by the demand, since big cash infusions get into the state budget. Did you try to analyze whether the transmission mechanisms of this amounts on the economy will be, considering our labor migration? The sectors that our labor migrants are occupied in, will these transmission channels be sufficient for them? And will their wages also increase, and will their buying power not suffer as a result? And if the exchange rate inevitably has pressure downwards of the Russian ruble, maybe on the expense of that, in dram terms, those incomes will reduce. Downward, you mean the valuation? In reality, it's upwards, right? Yes. I believe that in discussing the economy of the Russian Federation, we have to reflect on two important factors. It's the state budget and community budgets expenditures on the Russian Federation. As a result, in the economy, a great demand comes about, which is steered towards specific narrow sectors. I assume that's a factor of the specifics of that country. And the second is that in the Russian Federation, and we should look at the situation in the labor market, there is a tremendous demand for workforce, which is not augmented by adequate supply, but mostly is reflected in increased wages, like you mentioned. So, as a result of these two phenomena, the Central Bank of the Russian Federation tries, through increasing the rate, to somewhat constrain this demand. For the second time, they increased by 1 percentage point. It's now 21%. But in terms of the signals, it's at the large press conference they mentioned that this may be the end of this story. If there is a need to constrain or anchor inflation expectations, the central bank would be ready for new steps, they said. What issues may arise for our compatriots, labor migrants there? One could be the devaluation of the national currency, but concurrently with that, if we look at the real exchange rate and variables, we understand that if for Armenian exporters, on the background of such inflation rise, a possibility were to be extended to adjust their prices upwards. Let's say you're exporting bottled water. Today it's 10 rubles. Since it's inflation, it will be 12 rubles tomorrow. Will the Armenian producers and exporters be able to pass over that price to the Russian consumers? Remains to be seen. But then another issue emerges of the real exchange rate. Inflation is to our benefit in terms of exports, and there is a positive potential of certain adjustments. As what would be the solvent demand of the people, I believe, in the labor market? It's a very narrow situation, which most probably will be conducive to adjusting wages upwards, which may create opportunities for our labor migrants who are mostly involved in construction and services, would receive a certain compensation through that means. At the National Assembly, during your yesterday's communication, you mentioned that discussion is to reduce the inflation rate from 4 to 3%. What's the rationale for it? It's obvious that in developed countries the target is lower. What are the criteria that this country should answer and its monetary policy and the economic situation in order for this target to be necessary or possible to reduce? As a variable, inflation impacts every other rate in the country. If we succeed to make it manageable at the level of 3 but not 4, the assumption is we create an environment where the high interest rate expenditures are attempted to go down. Secondly, what makes us believe that, if I understand the question right, at this point in time the framework of monetary policy that we have is deemed to be one of the best in the world, and we believe our maturity level and the reliance upon and the trust in our policy is such that we should already play in an upgrade to a different league with more serious players and say facing bigger challenges. What issues do you refer to? It's one thing to manage inflation, which is 2 or 3%, and it's another to manage 4 or 5% inflation. The room for maneuver is somewhat larger. In this case, we state that it seems as though we're already tempered to the extent and have grown muscle mass in order to upgrade to a higher league. When you mention about the expenditures shrinking, you mean the citizens or individuals' interest payments? Every interest has, for example, if you want to make an investment, you're interested in your real income, right? If you trust in the promise of the central bank that in the long term it will be 4%, you build 4% into your interest, decision making wise. IRR or whatever, NPV, you name it. Or if you're going to deposit or buy a bond, your real return will be nominal minus inflation or inflationary expectation. The component that seems to be a tax on the investor will try to reduce it, diminish it. And these policy changes, what horizon are we looking at? 1 or 2 years or earlier? At this point in time, we're engaged in professional discussions with our partners from the government. Our team has already talked once or twice with the colleagues from the Ministry of Finance professionally, but there is a political component to this also. Low inflation on the one hand has a positive fallout, but if the inflation is high, of course the nominal income of the government is higher. So we should strike a balance here. Where should be the appropriate timing for this? Reducing the interest rate. Has it been discussed with the commercial banks? Will it result in loans or other services also reducing rates for simple citizens and the businesses? If yes, what would be the general impact on the economy? That's the first question. At today's meeting, we had an extended discussion on the transmission mechanisms and the overall level of interest in the country. Following the media, we see that there is a certain dichotomy that's always being discussed. That is, the central bank reduces overnight rate, but it doesn't reflect on the credit interest. Let's look at this way. From the perspective of the central bank, we set the overnight price of money in the country. At various other markets, the interest is determined based on supply demand. For example, if we look at the credit interest, it has its expenditures, that it's the amount of attracted deposits, added to it a certain risk components, and you see the rate that you get. Is there a demand in the market for such a product to be introduced, or the demand is so low that you will likely fail to credit at that interest rate because there's no demand for it? At this point in time, what do we see? We see that there is a big demand for credit in construction, not only construction, mortgages, consumer loan lending. There's significant growth in the demand for this, and since it's a unitary rate of the central bank, it's not sector specific, the assumption is that it may have two impacts in the event of significant demand. Either the volumes increase, in which case the interest rate will not go down. If there is a demand for such a product, it results in increased pricing. We assume that if had we not reduced from 975 to 725, we would have had a significant increase of the credit interest in the country. But since we significantly reduced our refinancing rate, concurrently with that in the country there is a 3-year-long high economic growth, external demand, which resulted in big demand for credit products. At this point, the credit interests are still not displaying trends of going down. We may assume that this may happen down the road, yes, because our actions are aiming at the longer term, and we send certain signals, among others, through it. An interesting market is, for example, the T-bills. Let's look at it. The green curve is the return as of end of 22. If we look at the return of 10-year T-bills, by the end of 22, it was 12%. So the risk-free rate in the country at which you can make an investment, this has a crowding out effect. You could have, without any risk as an investor, a bank, an investment company, a citizen, you can get 12% by just lending at zero risk counterpart, which is the state, which assumes that every other interest rate should be above that, depending on the credit risks, forex risks, and other risks. So look what happened to this rate as a result of our policy. As of October 28, it went down from 12 to 9.5%. We reduced more or less by 3.5%. The long-term segment of paper, which basically displays long-term expectations, that includes inflationary, productivity issues, they got down by 2.5%. They significantly responded. We're talking about bonds, T-bills. They had a significant response to our policy. What makes the loans more specific? Because there is an issue of balancing supply with demand. Here, when it comes to T-bills, if you look at the volume of their turnover, In 23-24, we by 1 trillion increased the sovereign debt. Even given that supply, we still had a significant reduction in the returns of the T-bills. There are markets that are more sensitive to the decrease of the refinancing rate. There are markets that are less sensitive, determined by risk, time lag, supply-demand factors. I would like to emphasize one more thing here so that you also convey it to the public. Today, our country's risk-free interest rate is approximately 9.5%. So it cannot essentially be that there is a long-term credit or loan product unless there is specific customer for which it could be lower than this, because you would prefer to buy T-bills rather than loan to natural or legal persons. So those interests cannot be below it. So through these steps we persistently impact the reduction of the risk-free interest in the country, and over time, if we see the weakening of demand, it will also affect our loan interest. With your permission, I'll have a follow-up questions with pleasure. Mr. Galstyan, such a reduction of percentage, will it not have a negative impact on the economic growth? Because the so-called stabilization of prices is not incentivizing new products. The economy likes high prices when there are new products, when there are new projects, initiatives, whereas we now, in fact, what do? We say there is a cap on that threshold. The economy may generate certain things, but it seems as though if by saying economy you refer implied to the businesses that would like to sell at higher prices, but how do you make a distinction whether they sell something new or old? Where do you draw the line? A company comes up with a new product, new service. The business strategy theory says that if a company is able to produce something that is unique, that's another definition of what you imply by quote-unquote new, they may be able to charge the price which the clients will be able to pay if that's a unique product. If we're going to all produce the same, we will not have any competitive advantage. Our mandate is that we are attempting to conduct our monetary policy in such a way that for the public at large, the whole society, the overall level of prices on the average does not exceed 4%. That's our constitutional mandate that we're bound by. As for business innovation and whatnot, we do not have too much leverage on that. That's a different turf. Thank you. Banksnews.am. Mr. Galstyan, you mentioned that at this point in time, risk-free rate is 9.5%, and that's the return of the T-bills. The average return on deposits is lower. It is lower. In which case, do we have a change in the demand for T-bills? Is there a higher demand for T-bills? If we're talking about deposits, we need to understand that these are the liability on the balance sheet of our banks, commercial banks. They attract funds. They should attract funds at a lower interest to be able to invest and be able to return the depositors' money. In these terms, we see that there is a trend of reducing the deposit rates, which leads back to the question of your colleague. If we see this continuing, These are an essential component in the cost of funding of the credits. In this respect, banks or whoever is buying T-bills, they do it in the assets part, not the liabilities. And quite naturally, our expectation is that the environment of overall interests will weaken in Armenia. We cannot guarantee that because you see geopolitics around us developing in a certain way. So this risk premium that we have to pay for being in this region often is quite hefty. From this perspective, the deposit rates are below the return on T-bills because they attract certain funds. Some of it they invest in loan products, some in bonds. At the same time, I believe that our population should actively participate in the market of acquiring T-bills itself on that market, which is a very important factor for the development of the capital market. And the banking products, that is deposits, will start to compete with government-issued T-bills, which will add dynamics to the market. Does the central bank have observations about the citizens? Why the citizens are not more active in investing in T-bills? Frankly speaking, that's somewhat outside of our mandate. External and internal sovereign debt management is what the Ministry of Finance does, but we're also an essential player in the market, so we believe that there are convenience and other issues that need to be addressed and resolved. People should have a possibility through their cell phones to identify themselves and acquire certain financial assets. This needs to be accomplished, and by default that will lead in a certain increased demand for such products. When should we expect such technical improvements? Because the return of the T-bills is higher. I will not assume the responsibility of saying when our colleagues will accomplish that, but we're ready to help along and take part in the discussions. Sputnik. The government of China a month ago declared the biggest post-COVID stimulus package for the economy. How shall this impact our gross demand in the economy, metal prices, that is? The positive developments in the Chinese economy have a positive fallout on global commodity markets. If we have copper, which will be in demand for certain products, therefore we may assume that the copper prices will stay high. It's 9,500 US per ton, which, if I'm not mistaken, is quite high. Historically, it's a very high price, which is a positive development for us, I believe. Let me also fill in, essentially, in our board discussions and our report, we keep talking about why the Chinese government went for this, identifying the risks that may emerge in the global economy because of the Chinese actions. We're not dealing with a situation where we may encounter a higher demand in these risks materializes. We're dealing directly with the risks that may have downward pressure on a global economic demand. So Chinese actions are just to alleviate those fears. In terms of interpretation, it's better to look at it as a policy which is aiming to neutralize those types of risks, which still remain material in the global economy, also for us as well. Exported services. Do you have comments on that? It mentions here that external foreign visitors and their funds shrink in Armenia. Are there any fact-based observations about this? I understand it's not easy. Whatever we have, we mostly pick from our official statistics, which is what the statistic committee publishes about tourists and their expenditures. We individually don't go over and above that. Whatever's there is on that chart. Long-term visitors, it's hard to gauge, very difficult. About the Indian citizens, there were some publications about the shrinking of their presence. How is it possible to capture? There are two sources. One says it went down from 16,000 to 10 or 11. The other says it went down from 50,000 to 30,000. But that's unofficial. There is no official statistics. So that we do not understand. How do those people end up unofficially in Armenia? Well, there is no official statistics. The official is the lower estimate. It's border crossing, whether they came as students or entrepreneurs or delivery men, hard to make a distinction. Picking up with this last question, the commission from re-exports were significant in the economy. Does the central bank have weighted observation? What if this income ceases? What would be that scenario? We'll get back to our natural rhythm of life. We need to understand that sooner or later our economy will grow on the expense of the potential that we have. Sooner or later our exports will boil down to exports that are our genuine exports, and the imports will be based on the demand that we have. The volatility, the wild volatility we observed over the last couple of years has already leveled to some extent. I don't have a graph to illustrate that. From after the great spike we have a significant reduction in these terms. I think we should not baffle at this or get disillusioned or fall into depression. Absolutely not. Our economy has its own growth potential, intrinsic, and we need to do everything for this growth potential to increase. The GDP to grow, for us to become a country that produces more unique stuff, more sophisticated stuff, which will assume higher returns. That's what we should focus on as a country. If you could please use 17 billion would be the trade turnover between Armenia and Russia. That was voiced somewhere. That was voiced by the president of Russia himself. That's good. If the Russian president thinks that our turnover should be like that, it's to be welcome. I do not know what's the breakdown of this 17 billion. What types of goods are? Mostly it's re-exports. I would be more skeptical about that. I don't know the extent to which we could venture to interpret what the leaders say. We should rather focus on our imports and exports. During the budget discussions, an observation was made that our GDP potential has increased from 4.5% to 5.5%. Does this mean that the future economic growth or the high economic growth contains less inflationary risks than before? That's exactly what it means. The inflation mostly arises when you have deviation between demand and your potential growth. If the demand outweighs, or the demand-driven growth is higher than your capacity to create something, it immediately reflects on the prices rather than the number of bottles on the table. So if we could produce more bottles, increase the supply and the capacity to increase supply, that assumes exactly what you said. We're ending up in a better situation inflation-wise. That's exactly why I'm saying that we should think about the potential rather. About food prices, judging from the FAO indices, there is no significant increase in food products. May we assume that in October it went down? There are slight developments, but nothing fundamental is what we observe. If the economies are slowing down over the world, the assumption is that demand would be weaker, and I don't know about the supply, the harvest estimates, but given the weakened demand, all other things equal, we will have stable or insignificant decreased prices in the background. How will this impact the imported prices, the tensions in the region, the logistical or transportation expenses, maybe, or the risk premium for moving stuff around the region? What's the extent of their transmission onto our inflation? At this point, Aramjan, it's insignificant, but we keep tracking it because the region is expanding, the definition thereof. Up, down, east, west, north, south. We need to understand what's transpiring in every dimension, and we don't see things that we observed during COVID. If you remember, container cargo got expensive 4 or 5 times. We do not have so far signals that would be a matter of concern. From this perspective, we keep monitoring, but nothing of concern yet. Banks news. Mr. Galstyan, what mechanisms does the central bank apply to track the cryptocurrencies? We see that major crypto exchanges are brought into the light elsewhere in the world. What's the policy of the central bank here? The central bank, together with the partners in the cabinet, is now developing a law on crypto assets, which we have to submit to the parliament for the National Assembly colleagues to discuss. We've already consulted with the private sector. Our approach at this point is based on the MiCA approach and the European directives, which sets certain rules of the game for that. That's it so far. Once those discussions and deliberations commence, we could dwell on it more. To perceive it better, if economic activity is higher than the long-term average, if exported services demand has weakened, what's the driving force? Weakened doesn't mean disappeared. The growth rate has decreased. Concurrently with that, after having 3 years of consecutive economic growth, there is a certain demand of the increase of the internal demand and increased lending. All of this combines creates a situation where your demand may be higher than your potential is. From this point of view, our assessment is that essentially this gap is insignificant. We almost closed this gap. But we'll live to see. Hard to say what would happen right now. The developments are quite At this point, the gap between demand and supply is more or less closed. Don't you observe overvaluation of the peak of 30% in wages is 5.9 now? Mr. Galstyan, somewhat the citizens that so far have not switched to electronic payments for public transportation have this impression that the 100 dram coins are less than 50 or 200 dram denomination coins. Is this right? Why do people feel this shortfall of 100 dram coins? That would be hard to answer this question. We'll look it up and we'll inform you in writing. This is the first time I encounter this question. There is discussions in the social media. I'm not so active on social media, but we'll get back to this for you. Thank you. About these electronic systems. Today this service is offered by one commercial company, Telcel. What does that have to do with the central bank? I understand, but one could have discussed it with commercial banks for each bank being able to offer that service. Being able to buy that by a debit or credit card. The bank itself doesn't offer that service. Is this not covered by the oversight function of... It's a city hall service. That's beyond our remit. I'll not comment on the rest. At least 3 entities should have offered that service, but who made the decision? That's beyond our mandate. It's a monopoly in making. Thank you.